10. Hello, and welcome to The Money Movement, a show where we explore the issues and ideas driving this brave new world of digital currency and blockchains. Global stablecoins, such as Centre Consortium's US dollar coin, Libra Association's new family of stablecoins are on the rise, giving way to coordinated regulatory responses for these innovative new forms of digital money and payment systems. At the same time, governments and large financial industry actors are examining what digital currencies backed by central bank money might bring in terms of new opportunities and risks. All of this is increasing the attention on governance models. How should global stablecoins be governed? How can standards be established that work across these leading stablecoin arrangements, but also contemplate and support government-sponsored and led digital currency projects? What's the role of the public sector versus the private sector? All of these are questions that we're thinking about in this realm of governance. And in particular, how can we learn from the lessons of the past 30 years in the development of internet standards, open source software, decentralized internet infrastructure, all building blocks that digital currency is taking advantage of and that these new kinds of systems and schemes are building on as well. And so as the internet collides with money and the financial system, governance models are really starting to take center stage. So to discuss all of these issues and more, I'm really thrilled to welcome our guests this week. First, Sheila Warren, who's head of blockchain and data policy and a member of the executive committee for the World Economic Forum, where she has spearheaded the formation of a global consortium for digital currency governance, and Dante Disparte, the vice chairman and head of policy and communications for Libra Association, an emerging global stablecoin arrangement with broad industry backing, where I'm also here as Circle CEO. I'm also here as co-founder and director of Centre Consortium, which is an emerging governance framework for global stablecoins, including the USDC standard. And we are welcoming Sheila and Dante to join us right now. Hey, Dante.
Hey, Jeremy. Good to see you.
Good to see you as well. And hello, Sheila.
Hi there.
Excellent. Awesome to have you guys on today.
Thanks for having us.
Yeah, absolutely. Why don't we start with something really basic, I think, for each of you. Sheila, maybe you could start. What is this new global consortium for the governance of digital currency that you have helped to spearhead at the World Economic Forum? Could you just talk a little bit about that agenda and what you're trying to accomplish?
Sure, my pleasure. So as many know, we issued a CBDC policymakers toolkit at Davos this past January, and that reflected 18 months of community building in the CBDC space with central bank technologists, and was the response to a demand signal from them that we create a toolkit for policymakers to understand the trade-offs and considerations in the issuance of the CBDC. So the Digital Currency Governance Consortium is the next phase of that work, if you will. Our idea was always to start with CBDCs. They were more palatable, shall we say, to the Davos crude, our community. We thought there was so much innovation happening there already, and there was need of a more objective guide to that particular kind of offering. So with the DCGC, as we call it, Digital Currency Governance Consortium, it's aiming to do the same thing with stablecoin. So key things to note: there will be no coin issuance. This is not a consortium in the way that we think about it, like Libra Association or Centre or others that exist in the space. We are simply here to look at policy aspects, specifically and governance aspects around the issuance of digital currency, stablecoin. And what we're trying to do is identify where are there themes, where are there gaps, and where are there trade-offs that we can help elucidate using kind of the forum's history of objectivity and neutrality to articulate what those distinctions might look like.
It's awesome, and I think an extremely important project, obviously, and thank you for that introduction. Dante, maybe similarly, in a nutshell, what is the Libra Association? What role does it play in governance around Libra? And just, a quick description there for folks.
Sure. So the Libra Association is now a year-old effort that is also a consortium-driven effort. Today comprised of 27 member organizations that are building a blockchain-based payment system and the supporting stablecoin infrastructure to be able to create the infrastructure necessary for digital money to exist, but also to facilitate lower cost payments at global scale. Excellent.
That's awesome. And I'll just sort of briefly also share. So I'm also a director of Centre Consortium. Centre Consortium has been around for now a couple of years, and Circle and Coinbase both were members of that, and it governs the US dollar coin standard. And there's an ecosystem of now a few hundred companies that are involved in supporting and implementing that in different ways. And I think we're also thinking about, okay, now as this moves into the realm of government oversight, as this moves into the realm of major existing financial industry stakeholders figuring out what's their role in this. This isn't just crypto startups anymore. This is moving into a very different kind of tier. I think all of us are kind of collectively thinking about what are those global governance models and how are those going to scale to support this opportunity. I guess I think governance as a concept means a lot of different things to a lot of different people. Sometimes governance, people think that literally means like government, like the government, what's the government going to do? Obviously there's this long history of governance in technology, on the internet, governance of standards, governance of, financial networks. What is, with this digital currency, global digital currency, what is governance? What does good governance mean? What is that going to look like?
I'm happy to take a stab at that.
Yeah.
Dante and I have a pact to not talk over each other, but it does mean we're going to be like, is it you? Is it me?
I can't promise I'll keep it though.
I know, I'm going to try. So yeah, for me, I think for us at the forum, rather, I should say, governance is a couple of different things. So one, it's kind of the enabling infrastructure that surrounds any particular issuance. So it is the regulatory framework. It is to some extent government policies. It is almost a cultural understanding the money, what money is, like all those kinds of things we think make up the broader governance environment, the enabling environment. But it's also the rules of a specific game. So any particular issuance is going to have, or any particular consortium or whatever it might be, is going to have its own rules, its own operating model, and all of that makes up the governance as well. So we kind of think about it as almost internal governance and external governance, and both those things need to operate in consonance. And part of what's really interesting is I think in the early days, like the Bitcoin only, kinds of days, there was this reaction to the external governance, if you will. It was very, very reactive, right? And so the internal governance was a key area of focus, but that interaction between these two different layers wasn't something that was given a tremendous amount of attention, even though it was obviously thought about, right? So what we're trying to do is draw those connections. With the work that we're doing. But I think all of these things are really important.
Yeah, and if I could just build on that, I think all too often big technology efforts, including the early movements in digital currency, tended to be projects that would ask for forgiveness rather than permission. And then we've learned the hard way over the last 11 years that it's a very, very complicated model. And it often then means that, these innovations are framed in opposition to existing systems. And especially when you're talking about money and finance, being in opposition to a regulatory regime or a compliance regime is, one, not great for longevity, and two, it's not really great in the public interest. We have to remember that a lot of these external factors that much of the early wave of the digital currency movement was railing against, or candidly might have been even designed to avoid altogether, a lot of those regimes around the world are established in response to, whether it's market failures and crashes and the rest, as a response of and a reflection of public interest. So I do think it's vitally important that the governance movement today, and I'm encouraged by the work that Sheila's leading at the WEF to help try to build a consortium here, is that the more we could harmonize these interests, the more we will learn that there's actually not a ton of conflict between a stablecoin project that is trying to get regulated and what is ultimately the type of public interest that we now see. And in this type of crisis, you could see, exact, very big bright spot areas where those interests are now starting to converge. Whether it's a government-backed digital currency or private sector initiatives, you're starting to see a lot of alignment here.
Mm-hmm. When I think about this a little bit, it's sort of like, and some of what you shared, Sheila, also made me think of this as sort of these layers of governance, right? You've got like, you know, the Internet Engineering Task Force governs TCP/IP, right? Okay, well, who's that? I mean, it's this international organization. It's a bunch of IP, a bunch of academics. It's sort of out there, and then you know, you have these other things like, okay, you have a blockchain. It's like an operating system, and it's an open source project. And well, how's that governed? Well, it's sort of informally. There's a community of people, and sort of people get kind of power to approve pull requests, and you know, and then there's sort of, you know, the governance of who validates transactions, and then there's a governance of a protocol on top of it, and then there's a governance of what laws apply to the use of that protocol, and then there's the governance. It's just layers and layers of governance. And I think a lot of times when people think about digital currency or global digital currency, I think they want to think of it as like just, you know, this one vertically integrated stack that is, you know, that you can govern. But what we're doing is we're building on all of these, you know, very diverse systems of governance that we can compound value from. And I think now the kind of work that the WEF is doing and consortium and others are doing is really trying to bring that all the way up to the world leader stage, and bring that all the way up to, you know, like, how do we as a planet organize ourselves around this particular technical breakthrough? So it's interesting. Maybe, you know, given the focus on sort of global stablecoins, or sort of the, you know, stablecoins that have really, you know, really broad reach, there's obviously this is principally a private sector phenomenon today. You know, when you know, Sheila, when you think about that interplay between, you know, public policy, the financial market infrastructure / financial industry, and then these new arrangements that are out there, you know, what are the, you know, what would you hope to see out of the governance work that you're doing to address the rise of stablecoins?
Yeah, so, you know, we have the luxury of not being wedded to any particular modality, right? Any particular offering, any particular issuance. And so what we're hoping to surface, you know, are the tensions and trade-offs, which we think are inevitable. I think that there is room for different kinds of CBDC issuances, different kinds of stablecoin issuances with a different basket, you know, behind them. And crypto, for that matter, pure crypto as well. And I think that there is a role for all of these. I think there is this kind of sixth grade social studies notion, you know, that we kind of start with CBDC and then we become more enlightened and we graduate to, you know, stablecoin, and then we graduate to crypto. And I want to blow that out of the water. It doesn't make any sense. Those things are different offerings for different purposes. And so I think to kind of Dante's point, we are seeing some convergence in, I would almost say, like, the force ranking of priorities, you know, but the reactions to those are different. Certainly, if you are FATF, or I just call them out, whatever, there's a lot of other bodies as well, the SEC. If you're a regulator of certain kind, you have a very particular point of view, you know, obviously. And if you are a Bitcoin maximalist, you know, which, again, not to posit those as opposites, but to some extent they kind of are, I think we can just own that here. You have a very different point of view, but that's in part because you're focusing on a very different problem, and you're focusing on your perceptions of that problem. So part of what I'm heartened to see is academics turning to articulation of the problem space, in addition to kind of the design questions that come up. And we're hoping that as we see more and more of that, we're going to be able to really ground in a common understanding of what the different problems are and what types of offerings are of most value and where that value can differ. So financial inclusion is a great example. Remittances is a great example. Interbank settlements is a great example. You know, they have different requirements. You can think of them as different use cases, which they to a large extent are. And how do we articulate the nuance there in a way that can translate into governance and into an underlying governance framework? That, I think, is the real challenge, and where we feel we can play a really strong role, because, again, we don't have any of those particular use cases as of paramount importance, and we're not trying to in any way assert that, right, that one of them is the priority over another.
And if I can add to that as well, Jeremy, to me, this entire asset class is not as much a breakthrough in technology, but a breakthrough in organizing principles and therefore governance. I mean, like, not since the earliest days of the internet and the era of tech titans have we seen a space so desperately in need of regulatory clarity and alignment with all of these external interests for it to continue to blossom and thrive. I mean, oftentimes people dismiss blockchain efforts and crypto efforts as a race to the bottom, and that a lot of these projects are looking for, regulatory havens and different locations. This is not about arbitrage. If we get it right, it's about empowerment. And I think Sheila hit on a very important point about, in the regulatory domain, they talk about same risks, same rules, or technology neutrality. It tends to be difficult to put into practice. But from a practical point of view, when you describe then the asset, the tokenized asset or the digital currency, I also think it's important to add another layer to that same risk, same rules model, which is regulate the economic behavior of the digital asset. Don't create a catch-all model where all crypto is bad. Not all stablecoins are created equal. Not all CBDCs are created equal. Hank Paulson wrote a great piece recently that said, a digital version of a currency is nothing less than the sum of all the parts. And so if all the parts are also bad, a digital twin will also be bad. And so the governance breakthrough here will do more for the mainstreaming and the mass adoption and all the good that come of this space than the technological breakthroughs.
Yeah. I mean, I see that. I mean, this is like what is standing in the way. I mean, there are technological things that need to happen. There's usability things that need to happen, scalability things that need to happen. There's various things that are moving along. As a technologist, those are solvable problems, and I can see that right on the horizon. It's these governance issues that are going to allow a person, a business, a government to say, yes, this is the future of the international monetary system and financial system, and to have the rules of the road and know how risks are managed. And so
I think that's exactly right. It's a tremendous opportunity, and rather than just digitizing our existing system with all of its flaws, the flaws that currently exist, with all of the dynamics of power and the balance that exists there, or doesn't, the imbalance, I should say more accurately, and the exclusion that is inherent to our current system, we have a chance to rethink some of that. And we can rethink that using governance, and then we can apply whatever technological layer is going to be of most benefit to that. So I should note also, just because I didn't, that we are technically agnostic. So our CBDC Policymakers Toolkit, does contain discussions of where blockchain is of value and where it might be of less value. And we certainly think that there are and will be explorations of CBDC that have nothing to do with the blockchain, that really just leverage more ordinary, let's say, technologies. And the same thing may wind up being true for certain stablecoin issuances as well. I think that we need to be examining very thoughtfully and holistically, where a technical solution is actually adding value, and that value is coming from the new governance model.
Yeah. And if I can add, again, another sort of general philosophical point here, in my mind, if we accept the narrative that finance has reached a point of diminishing returns, i.e. a world with 1.7 billion people unbanked, 1.3 billion underbanked, the inability for you and I to send value to each other instantaneously, as easily as we would send a message or a video or make a phone call, that perhaps, if that is in fact the case, that we can no longer extend the perimeter of the formal economy short of big scale innovation, then these types of innovations aren't necessarily competing with the existing financial system, but perhaps completing it as one sort of thesis. Yep. And we do want to encourage a lot of innovation, a lot of vigorous competition around all of the edges of these ideas. The other piece of the puzzle is the external environment is the rule-making environment. And so the more bodies like the World Economic Forum, the Financial Stability Board, and a number of other groups that are starting to coalesce, and on top of which you then have something like 70% of the world's central banks thinking about CBDC or experimenting with it, to me, that's a very encouraging environment. We need to move. This is not something that will, is going to get better with time, the condition of being excluded from the financial system. And it's a source of an enormous amount of risk in the planet. And the pandemic has only just revealed that it's fortress nations, just as much as developing and emerging countries, are being plagued by very deep sources of financial exclusion. And unless people come up with better fixes faster, these issues aren't going away.
Yeah, no, I see that. These are it's sort of kind of perfect timing on a lot of fronts from that. I wonder, there's sort of these lessons that we draw from other phases of innovation in the internet. That's a common theme. There's obviously lessons we can draw from, electronic money itself, like the birth of messaging standards like SWIFT, the birth of card associations, like what we think of as electronic money today, whether it's sort of fractional reserve commercial bank money or central bank money, like all of these, ended up, kind of happening at scale when broad stakeholders got together to agree upon standards, to make sure that those standards and how they operate work within the law, and that governments be comfortable with them. And, this is sort of, as you said, Dante, like this is the next logical stage of the international financial system. It has the potential to do a lot more and be more inclusive and more efficient and open up, programmability and all this super exciting stuff. But, fundamentally, the thing that gets these things to have scale is layering and governance. I wonder, what other lessons we can learn from the growth of the internet itself, and internet standards. And, I think I remember well, when, the early stages of commercialization of the internet, and, you had regulators in every country in the world, some of whom controlled national monopolies that controlled, say, the communication system of a given country, some of which had, actual monopolies, but, fundamentally, like, there was a set of governance that emerged around technical standards that was mostly driven by computer scientists, academics, innovators, and then industry sort of said, oh, you know what, this stuff is pretty good. It's good enough. We're going to start connecting to it. And then, the technology raced way ahead of what the regulatory regimes ever had. Like, it used to be if you wanted to like broadcast a radio show in Italy, like you needed permission from a regulator to do that. But I can do that. I can do that right this minute. I can broadcast a radio show in Italy uncensored. And so I wonder what lessons there are to learn, and whether is there a disconnect between what I'll just call like the community-led, open source, grassroots, movement of the internet, which is, has built all this stuff, and the expectation that governments have about, no, this stuff is stuff that we control. And how do we reconcile that? Because it seems like it worked in the world of information, knowledge, communications, content to be a little bit more open. And I wonder if it would work in the financial system as well, or if the instincts of governors to want to control this are too much at odds with that.
Part of the challenge, I think, in this space is that you kind of had the app and the technology happen at the same time. But at the same time, like we are moving to a place where you can divorce those two things, but a lot of people don't really understand that yet. Still don't really get, that. I remember when I started at the forum, in 2018 Davos. I started 2017. In 2018 Davos, my entire soundbite was like Bitcoin and blockchain, not the same thing. Bitcoin and blockchain, not the same thing. Like over and over and over, parroting it, right? Because people didn't understand that.
Yeah.
And so we've moved past that, but there's still a general lack of understanding of the distinction between the technical element and the financial systems element. And this is recreating something that has a tremendous amount of power and inertia behind it. Right? You're going all the way back to kind of Bretton Woods, and you think about creating a new financial order, a new financial system. The thing I think that's not, so there's a lot in there to unpack, but the thing I think that's not talked about a lot in the internet is how we thought about systemic risk. And so one thing that's really interesting, I think this is Dante's earlier point, is that we've kind of defined in the financial system systemic risk. We've just kind of like carved out a whole group of people and said, well, yes, they're very vulnerable, but they're just outside of our system. Therefore, our system is really not all that risky, or we can kind of allocate the risk in a way that kind of neutralizes a lot of it. And then this whole thing over here, we're going to ignore. And part of what I think the pandemic, at least I hope it has really highlighted, is that no system, there is no outsider to the system. You have to look at the entirety of the system, and you have to accommodate and count for that systemic that risk that is coming from outside of what you think of as your closed system. So I actually think the internet early days did a very good job, without necessarily making this a highlight, but thinking about that and being very open to a model that would accommodate more holistic notions of systemic risk. And that's something I don't think we talk about enough in our sector. We all think about it, without maybe implicitly or otherwise. We don't really talk about it as much. So I started doing a lot more thinking about the early days of the internet and how risk was accommodated and how we could think about that in the new financial system that we're all interested in seeing be built, or in your cases, actually literally building.
Yeah.
Well, and the key is optionality, right? So if as it happens, risk is my cup of tea. I serve on FEMA's National Advisory Council, lose sleep over risk every day, all the time. And when you think about it, the one area of literally the entire global economy that performed well in the middle of the pandemic that sent the entire world on a work from home excursion, those so fortunate to have the ability to work from home, and it withstood the load, right? It withstood the load of entire economies being permanently working from home, and that kind of bandwidth capability and that resilience, inherent resilience in the design. Our financial systems don't enjoy that, right? So when the federal government had to respond to this crisis with in all about $5.5 trillion of intervention to save the economy, effectively an example of privatizing gain and socializing losses, the very type of pattern we saw in 2008. It then begs very, very deep questions about whether or not things like financial inclusion are basic human rights. And simply put, whether or not ubiquitous, near universal access to the internet should be simply a part of the digital commons that we all enjoy. If we're all going to depend on it in the middle of a fire drill, which is the COVID-19 event, then we should also ensure that on those rails could ride the transfer of value, the transfer of information, the transfer of assets, the transfer of title, identity, assurance, authentication, you name it. Today, none of those things are possible at scale, and it's an indictment of us as a planet and as a modern economy. I'm speaking now of the United States, that in order to exercise your civic duty and go vote, you have to go violate social distancing requirements and wait in a physical line to exercise your civic duty. That should be something that motivates all of us, whether it's blockchain or some other standard, to make sure that the very core principles of functioning in a modern system and in a modern economy can leverage technology as a difference maker. And for all the areas that broke very rapidly with the onset of the pandemic, value, identity, voting, these types of basic civic engagements could use a little bit of digitization.
Yeah, I love your thinking there, Dante. Right on. I think I think what's interesting is there's this sort of top-down view, like should the national government have in China there's like a blockchain is a major national initiative. It's got, sponsorship every up and down the chain. It's, no pun intended. It's a big thing. There's nothing like that going on, in most Western countries, certainly in the United States, which I think is unfortunate, but there is a lot of bottom up innovation happening, right? There are so many interesting engineers, startups, projects, some sponsored by big tech companies like Facebook, but lots of them that are open source, that are building the plumbing for a public infrastructure where you can do secure identity, and that nation states could even depend on for voting. And so there is so much that is there, and I feel like the collective commons of intellectual property creation that the internet has is working. And it may not work on the speed that we want. And I think what we're seeing out of China a little bit is, leveraging that IP commons and all the energy around it with a big boost of industrial policy as well. And so I think that could be, part of the answer.
Well, and I'm sure all of us are, sorry, Sheila, that's the only time, and I won't do it again, I promise. I'm sure we're all tracking, right? We're all tracking with great interest. The way Chris Giancarlo, likens this as a digital space race, sort of an equivalent. I'm not in the vein of a zero sum kind of person. I don't think we have to win at anybody's expense. And I think any one of these projects would benefit enormously from a very vibrant and innovative, thriving private sector. And what you see here, and this is why, again, I'm back to the great work that the Digital Currency Governance Consortium is trying to do, and the WEF is such a uniquely placed entity to build those bridges, is that you do want, and I think all of us would want, to have the public sector have oversight over monetary policy and the creation of money. If a stable coin is nothing better than if imitation is the sincerest form of flattery, then a good US dollar-backed stable coin is trying to mirror the underlying economic soundness and preconditions of the US dollar. But the creation of the dollar and the management of public policy and monetary sovereignty is a public sector activity. But the rails on how that type of value are delivered should and ought to include anything from a SWIFT transfer to an ACH to an EFT to an option based on blockchain and stablecoins. It's a better, more resilient system than one that is only riding on one or two cylinders from an economic value point of view. So it's not zero sum. I want you to succeed, and I want everybody else in this sector to have a chance at success. Right now, that success is being hindered by a lot of red tape, a lot of fear, and a lot of apprehension in the public sector that these types of risks or projects become systemic or they destabilize the system. And a lot of that sort of early branding problem the space had is kind of lingering with all of us. But I think there's a new era here where we can get it right and also get to innovate at scale.
This gets to the public-private dimension here, Sheila. I know that's fundamental to the web platform. Yeah, maybe you could talk a little bit about.
Yeah, absolutely. You know, everything we do is multi-stakeholder in its conception. So it's about bringing together public and private sector actors and the third sector as well to really think about civil society actors, academics and others who are really focused, possibly more narrowly, but experts in particular needs articulated by certain communities. I think another thing we try to do is think very hard about geographic diversity. So a lot of the conversation needs to, and I know that both of you are good about this, but many are not, think about where the innovation is really happening. And that's in part where the innovation is able to happen. There is less incentive in really established economies. There's more fear, there's less, there's more incumbent power, right? So a lot of the innovation is happening in frontier economies or smaller economies, and we're learning a lot from what's happening there. So when I first started at the forum, you know, it was really, I had to really make the case that we should be focusing not just on the sort of typical halls of power, but looking at, you know, a lot of the island nations, the ECCB, looking at what Cambodia was doing, looking at some of the work that's happening in Africa, like all over the continent, by the way, right? Not just in Kenya, not just in what they were doing and kind of coming down in a draconian manner, or Ghana or Nigeria, but really looking across some of these economies to see what are the opportunities that we may be with a Western mindset blind to, and bringing those communities together. So our CBDC project actually started off with a goal, the only goal was community building. It was to say, we know which banks are talking to each other and which aren't. It's a huge miss. And we have the convening power and ability to say, you need to listen to these guys over here or these people over here and do some education about what is actually possible with this technology. And in that case, it was really starting off with a focus on blockchain, but then moving into an examination more of CBDC offerings. Now, to the point about the kind of one ring to rule them all, you know, we are fervently opposed to that view. I don't think it makes any sense. It doesn't make any sense, strictly from the standpoint, if you even thought about it, if there was one CBDC, one stablecoin, you know, and one crypto, there'd still be three, you know, so they have very different needs. But it just doesn't make any sense because, as you know, Dante, depending on what you kind of choose to put in your basket or what you choose to be backed by, you're basically adopting to some extent a certain set of values, you know, and I think that we have to be very mindful of what those values are, not just from a literal economic power, you know, kind of really from a signaling perspective as well. I think that's also really important. And so while I agree with you, you know, that it's really important to think about stability, particularly in the environment that we're in now more than maybe ever, as we're getting economic fissures and challenges that we haven't really seen before, well, at least, you know, in our lifetime. I think that it's really important to think about that as well, and to think about, you know, one thing we're interested in doing is thinking about almost like ethnographic type studies of money, right? And how the cultural values around money translate into policy, and how making that more visible can enable us to kind of almost cherry pick some of those values and norms and put them into other issuances without having to adopt an unstable currency. So there's things like this, I think, are really to be quite fruitful and interesting to explore.
Very much. It makes me think about, and I know this is a key consideration with Libra as well, which is like, it's very easy to get caught up in the, like, what does the G7 think? And, what's the Fed or the ECB or whatever. And then, it's a big deal, the FSB and the G20, and they're going to have global stablecoin, regulatory frameworks. And I think that's all very positive. We're all, involved and contributing, and that like sets a standard. But like the G20 is not the world. The G20 is the G20. And, when you think about the benefits of this technology, they go way outside the G20. And what are we really accomplishing? Are we building a new international, an internet of money that is truly global, that is, the benefits and the frameworks, can be taken advantage of by everyone everywhere? Or are we, trying to stovepipe and recreate the rule set that sort of runs the current monetary system that's largely dominated by the biggest economies? And, what is the balance there? How do we ensure that, in particular, innovations like global stablecoins, where they have the reach of the internet and, people can participate in different ways, how do we ensure that happens, that we don't just make this a club of the G20?
Well, so Jeremy, I mean, you hit the nail on the head, right? That to me, candidly, I think a lot of these innovations won't be as meaningful as they could be if all we do is replicate the existing system, right? And if you were born, and candidly, the existing system has more to do with the zip code or the country you were born in than anything else. And even domestically, a payment across two banking platforms that are not conversant introduces death by 1,000 cut fees, and we're laboring under slow, analog, painful examples. I mean, ask the millions of Americans that were waiting for an analog check to arrive, who were already living check to check. 40% of the country can't survive a $400 or $500 setback. So I think we would fail in the effort if the effort didn't absolutely extend, or at least from a technological point of view, remove the cost and the barriers of extending the perimeter of the formal economy to the billions who are on the margin of it. Otherwise, it's not real long-term value added. I mean, we have to figure out how to lay down infrastructure, not unlike the internet. That pre-internet, it would have been very hard to provide for connectivity that was decoupled from fixed line infrastructure or from physical infrastructure, all back to the country of birth and the zip code. Here, the same challenges hold true for financial exclusion. And if we want to functionally extend the perimeter, we have to make a mobile device that's internet ready a regulated payment endpoint. And I'm absolutely, like Sheila and others, completely technology agnostic as to how this is done. But what I'm uncompromising about is that it is done, because the stakes are far too high, and there are far too many people on the margins for no good reason other than the thought of one brown person or a person in sub-Saharan Africa makes one errant payment, the entire continent must pay. So we could do better than that as a planet. And I agree with you. We simply can't, lobby across the Atlantic to get it right at one level. We have to figure out how to anchor this in a multi-stakeholder environment.
It's getting policymakers to think bigger. Think bigger about what this new, like a global digital economy, like really think bigger about what that can be, which I know both of you are doing.
Yeah,
which is awesome. Maybe we can try and end on I hope an optimistic note, which is, there is this moment in time, there is this focus on global governance, there is technological innovation, there's all this stuff. What do you think? What does this look like in 2 or 3 years? What does this look like in 5 years? I'd love to hear both of you, share your thoughts on that. Sheila?
Yeah, I think it's quite different in 2 to 3 versus 5. So in 2 to 3, I think everyone is still reacting to China. Just putting it really bluntly, I think that's going to really occupy the next 18 months or so, because it is human being nature to just kind of react, right? And if what we expect to see coming out of China is what we actually do ultimately see, I think there's going to be a lot of needed, to some extent, but also perhaps overblown response to that. However, I think that will dissipate. I think that, relatively quickly, I think people will kind of accommodate whatever they see and figure out exactly how to respond to it or carve out a new space or whatever it might look like. And then we'll shift into something that I really hope is truly more global and inclusive in nature. So at the 5-year mark, to kind of focus more there, I think we are going to see a lot more access by people who are not currently included in the formal economy into the formal economy, with on-ramps and off-ramps to more traditional systems. I don't think those are going to go away, I think, to kind of Dante's earlier point. But I do think we're going to see more entry and exit, in and out of those systems where it is productive to be in those systems, versus being adjacent to those systems, but in a way that is complementary, to those systems and accommodates the reality of those systems. Do I see a massive Fight Club type burn it all down, Mr. Robot Revolution in money? I mean, I gotta be honest, I don't see that, certainly not in 5 years. And I don't even know that that is necessarily necessary. However, I do hope that certain aspects of our current system that really don't serve anyone well, they serve very, very narrow set of players extremely well, and they really don't serve anybody else particularly well. I hope that we will be able to loosen the stranglehold that certain actors have on our economic, monetary and financial systems, and more equitably allocate the risk and reward, as opposed to just reserving all the reward for a handful and blowing the risk down to places where we like to pretend that we can treat it as outside of our system or invisible to us. That's my hope, and I feel very optimistic about that in a 5-year timeframe.
Awesome.
Awesome. Well, look, for my part, for all the doom and gloom and the talk of risk and resilience, I'm actually an eternal optimist. And I think between 0 and 3 years from today, I think one will have made it clear that the stablecoin and the digital currency movement had less to do with reinventing money and more to do with reinventing how people interact with the exchange of value, number one. And I think you'll start to see real big movement, for example, across key remittance corridors around the world that are stranded at the 7% global average, if not higher. You'll start to see very vigorous competition at the edge of trying to enable faster cross-border peer-to-peer payments. And that, to the extent that can happen in a 3 to 5 year run, I think it's a very, very meaningful contribution. And then in the 3 to 5 and then 5 onwards, I do think you'll start to see a lot of ubiquity of this. I mean, there is a movement afoot that is that one, it's a generation different than our own, I presume, born with instant gratification, born with trust in technology, that is going to be much more willing to accept that value can also exist in a non-physical form, and transferred in a non-physical form for everything as simple as paying a micropayment for liking a Medium article, or as complex as making a commercial transaction. I think the movement of money and the movement of value is what is being reinvented around these concepts that we've discussed today, and much less so the reinvention of money itself. And so I'm very optimistic that a lot of good will come in the future.
The money movement has legs.
Yeah, exactly.
Yeah, this has been awesome, you guys. I really enjoyed the conversation. A lot of just far-reaching stuff, and obviously looking forward to continuing to work with you guys and see a lot of this stuff through over the next couple of years. So thank you.
Same, yeah.
Thank you, Jeremy. Thank you, Sheila,
for joining today.
Thanks.
So, final reflections. I would say it's just amazing, that we've come this far. I think we're really seeing the birth of a fundamental new infrastructure for the global economy. Really believe strongly that these multi-stakeholder outcomes, where governance that involves the technology community, the government community, intellectual leaders, financial industry stakeholders, that's what it's going to take to bring this to scale and to the mainstream. And I think, as you may have heard today, we are on our way there. That leads us a little bit into next week's episode. Digital dollars and global stablecoins, crypto and blockchain in general are really coming into focus more and more with policymakers globally. It's a much more intense focus at the supranational level and at the national level. As we talked about, in China, blockchain is a national strategic priority. And in DC, policymakers are starting to engage. So we're going to be exploring digital currency in DC next week, and we'll have several, I think, excellent guests who are playing key roles in interfacing with the policymaking community and the regulatory community in DC, and hear from them from the front lines of digital currency policy in DC. So looking forward to that episode next week. And until next time, stay well, stay safe, and stay informed. Thank you.